So like we announced already on Tuesday, we have today a special edition regarding the Bitcoin mining industry in the United States. And we have an interview with Fred Thiel, so really stay tuned up until the end. Also in the second half of the video, we will present you new models regarding the Bitcoin and new charts. So we will really concentrate today on this subject mining, because as you know, in April 24, we are going to see the halving, and this will have a great impact on the mining industry. Before we do this, we quickly check the overall market. And this is not looking good today. I mean, it's all red, S&P 500. This is certainly due to the crisis in the Middle East. I mean, the pictures we saw from this hospital, a lot of people injured and died. This is really bad. So it's really on the global financial industry a huge problem. And we can see it on the bonds, on the 2 years and on the 10 years. They're going up and up and up. Another thing is the gold price in relation to the dollar index. The blue line is the dollar index. The gold line is the gold index. And something very unusual is taking place in the moment. As you can see, the dollar index goes up and the gold price goes up. Very seldom it happened, because usually it's an inverse relation between these two lines. And this shows there's a lot of fear in the market. Okay, and here we check the Bitcoin. Bitcoin is not affected by this. This is really amazing. It's stable, 28,625. This is on a 4-hourly base, and we are really going sideways. We quickly check the market capitalization. We are on 12. Well, yesterday, the day before, we were on 13. Back on 12 with $556 billion. Halving clock. This is new. It's now April 12. It's another 175 days. This is something we will look into great detail when we talk about the mining industry. All right, and for this reason, we come now to an interview which is very interesting, because it gives a deep look into what's going on. One thing you have to understand, 2 years ago, 50% of the hash rate was located in China, and they banned it. And a lot of the miners went to the United States, especially to Texas. So today, about 35%, maybe 40% of the global hash rate is located in the United States, especially in Texas, where about 4 big companies. One of the biggest is Marathon Digital, and we will now listen to an interview with the CEO, Fred Thiel.
Fred, remind us about kind of the economics of being a miner. There's the energy inputs, there's the price, obviously, and where things stand right now.
So there are a couple of levers that impact profitability. One is obviously the price of Bitcoin, energy cost is the other, and the global hash rate, which is the total amount of compute power that our industry applies to solving this equation, because the rewards or the subsidy that we're paid for winning blocks is a finite amount per day. There are a finite amount of blocks, so it's kind of a zero-sum game. And the more compute power there is, the more difficult it gets for us. And the global hash rate has grown by well over 100% in the last 12 months, so it's become twice as difficult for us to do what we do. But we're very fortunate. We have one of the most energy-efficient fleets in the industry today, and we have been able to position ourselves well with our energy providers and our hosting contracts, and we continue to expand with renewable energy on the international and domestic basis, working very focused on optimizing our cost even lower.
So it's interesting on that energy part, because analysts have described your approach as asset-light hosting strategy. What does that mean?
So in the boom time in our market, the fastest way to expand was to partner with third parties who would invest in the infrastructure, and then as a miner, we would bring the mining hardware, if you would, the mining rigs, which is about 70% of the total CapEx spend of a project historically. And so to grow faster, we relied on third parties who would build infrastructure, and then we would essentially pay them to operate the sites for us, and part of the profit they would generate would go to pay back the infrastructure costs they had, the investment they had made. We have since shifted our model much more towards a build and own model. The site that we developed in Abu Dhabi, which is started going live in July and will be completed by the end of this year, is fully designed and built by us. It's owned as a joint venture together with the Sovereign Wealth Fund of Abu Dhabi. And we continue to develop and build new sites, both domestically and internationally, using that model where we own and operate the site, because we've now developed a technology stack that allows us to do this much more efficiently than other miners. For example, our site in Abu Dhabi, the pilot site, ran for over 100 days before an engineer had even go on site and touch any of the equipment. That dramatically lowers your operating overhead for these sites. So we believe as an operator, we can be much more efficient than even the top operators in the industry.
And how does that position you for this thing that happens in Bitcoin for mining rewards, in which those rewards are cut in half every 4 years? Does that, and that's coming up next year?
Correct. Yes, that the halving, as it's called, or some people call it the halvening. Yeah. Every 4 years, the way the Bitcoin network was originally designed by its founders was that the block subsidy that we receive it drops in half. The theory being that you have a supply shock in the market, it drives the price of Bitcoin up, and as adoption grows, transaction fees, which are added on top of that subsidy, would make up the difference. So every 4 years, we have an incentive to get very, very, very efficient as an industry. And typically every 4 years, there's a cleansing, if you would, of the least efficient operators. So we believe that if the price of Bitcoin stays in the range-bound area where it is today, somewhere between 25 or 22 and 30,000. The cost to mine a Bitcoin will double in end of April of next year. So if the average industry cost today is somewhere around $16,000, $17,000 per Bitcoin to mine a Bitcoin, well, that goes to 32,000 in May. And if the price of Bitcoin isn't somewhere near 40,000, then the least cost efficient and producers will be negatively impacted. So we believe this will be a great market for consolidation. We've spent the past year cleaning up and tidying up our balance sheet. We paid down 52% of our outstanding debt at a 22% discount, convertible bond that we bought back recently. That was generated $100 million savings to our shareholders. We have over $400 million of cash and Bitcoin freely tradable on our.
So I think this was quite interesting. I would just like to summarize a little bit, a couple of highlights what he said. And later on in the video, we will look at this in great detail when we look in our models and charts. He said one thing which is absolutely essential. He said, and this is also according to our model, he said, in the moment, the production cost for one Bitcoin is about $16,000. And he said this will double, which is like $32,000. So bear in mind, today we have a price of about $28,000. And when you go in history, and we will have a look on this, the price after the halving always went substantially over the production cost. So 32, he said at least 40 to 45, and this is very much what our prediction also is for the halving. So I would say now we go into our data and new models. All right, first of all, this is new. They have it since a couple of days. It's regarding the Bitcoin spot ETF approval timeline. This is really very, very important because this can drive the price enormously. And here for the first time, you have a list. There are about 12, 13 companies applying for this. But we just highlighted out here the 8 biggest. And what is important is in January 10, 24, there is an absolutely deadline. The SEC has to make a decision for the application from ARK. And then after BlackRock, Bitwise, Van Eyck, Wisdom Tree, Invesco, Fidelity, and Valkyrie, they all follow in March. So it's very, very likely that the decision has to be made in January, because the one thing they can't do from side of the SEC is to give approval to one and not to everybody, because that would be a big problem for the whole market. So what we believe is there will be a decision most likely in January, and this will give a big, big push to the Bitcoin price. All right. Here we come now to the Fear and Greed Index. As you know, this is now based on our own data. It's only related to Bitcoin. It has nothing to do with the crypto market. And as you can see, it's about 33% in the moment, so still in the negative side. A very important thing now is, this is something we have since a couple of weeks, is the Bitcoin relation to money supply. As you can see, the Bitcoin price goes up, the money supply goes down. This is a very bullish thing, because a lot of people said, well, in the last bull run, the price only went up because of the money supply. But what we see now, this is not true. Another thing is the relation gold and Bitcoin. And here, gold made a huge jump in the last couple of days. This is because of a crisis in the Middle East. And the Bitcoin stays stable. Another thing is the last lines, which is the Nasdaq and the Bitcoin. And here you can see that the Bitcoin goes sideways while the Nasdaq goes down. So this all indicates that Bitcoin is very much sort of grown up and gets very stable, and it's not really volatile in the moment. Everybody's waiting for the news. Well, the heat map all in all is red today, like the overall market as well. Dominance is going up. We are now to 52%. This is very bullish. Quick check on the open interest. And this is very interesting, because since about a year, the relation between the futures and the price is that the futures are over the price. And this is very typical. When we go back before the last halving, it was the same thing. So it's in the moment a situation that it's not so much on the spot side, it's more on the future side. And this is why the future positions on the open interest in relations are higher than the price. Interesting is the liquidations. We saw this huge short squeeze a few days ago. This was fake information. Interesting is the long-short-term ratio. This is very important, because here what you can see is that majority of the market is on the short side. So if any news flow from a positive side comes into the game, we could see quite a short squeeze. Loaded addresses still about 49 million. Balance on exchanges still a downtrend, meaning about 90% of a Bitcoin are not moving in the last 12 months. We are simply not at the exchanges. There is an OTC market, but the liquidity on the exchanges is going down and down and down. And this is very bullish for the price in the future for Bitcoin. Hash rate, on the other hand side, is going up and up and up. This is what we just heard from Fred Thiel when he said competition in the last 12 months doubled. We are now on a level of about 420 extra hashes, which is double in the last 12 months. So this drives up the prices. And here we come to the Bitcoin price model we have since about a month. This is also what Fred said. In the moment, it's about $16,000. And this will double with the next halving, which will take place in April. So definitely from history, the price will go over production rate. And this is for a long time what we say in our models. Volume still too low. And here we come to the trend following indicators on the short term. It's interesting, we are still in very narrow Bollinger Bands. But we saw on the MACD a bullish crossover. And also we see a long-term trend on the MACD. You know, it's going up and up and up. It's the same on the RSI, which is a momentum indicator. So underlying, you know, it's a stable price with an uptrend. This is what we can say in the moment. Well, our model for the halving says still about $41,000. And interesting is this model, in the moment, we are $6,000 underrated, according to the model, and the real price And this model says around about $41,000, which is exactly what also Fred just said. This is what the mining industry expects as well. The second model says more or less the same. Fibonacci retracement, we are still in the 50% zone on the upper side. That's good. Interesting is the 50 days and the 200 days seems to be we have a bottom on the 50 days. Could be that the next 1-2 weeks. We see a bullish crossover, which would be a golden cross to the upside to the 200 days. And the ribbons from EMAs, the 7 EMAs, very narrow, very narrow. So all what we can say, it's time to buy Bitcoin on 28. A couple of weeks or months, you will think, why didn't I buy at 28? It rumors very much underneath of everything. Well, our most important model, the logarithm regression model, and as you can see, we are in the end here of this cycle, 4-year cycle, and it looks very similar to all the cycles before. So I hope this was a little bit inside information about the mining industry. Very important. Why is this important? Because there is one huge difference, a big difference between Bitcoin and the rest. It's proof of work. You have to do something for it. You need electricity, you need a lot of servers, and you have production costs. And it's a decentralized network, and because of the high hash rate, it's the most secure network in the world. This is what a lot of people don't realize, besides the Bitcoin price. So I wish you a great weekend, although the news flow coming from the Middle East is not good. So hopefully things don't get worse. Thanks for watching, and bye-bye.